Your strategy has to involve your mindset, and your strategy then involves the actions that you take to move you from where you are to where you want to be.
I'll start with what Visa isn't, right? Visa doesn't issue credit card. We don't issue credit. So Visa doesn't do that, which surprises a lot of people.
We'll use a phrase like, well, things changed, but things don't change. People change things. All the legislation that has been passed, somebody advocated for that. And so International Women's Day is to commemorate that history of women making change.
Several of the banks have started to migrate their existing debit card portfolio to chip and pin EMV technology. So the SMEs are going to benefit from a wide range of customers who previously did not have a credit card, but only had a debit card.
Two guests, Holland, Bronte, Tinkew. He is the manager of the St. Vincent Street branch in First Citizens Bank. And we also have Ravi Ramlogan. He's the senior manager of commercial banking. So make sure to smash that follow button because you want to be able to get exclusive notification when we go live, because this series is ongoing. Give us the top 3 reasons why you may get denied a loan.
When we look at a loan application, I know banker sends up or submits an application with the hope that it is declined. We try to represent the business as much as we can so that we can recommend it in the best way and hopefully get the feedback that the customer is looking for. Sometimes customers come in, they're not in the habit of preparing financial statements. So the loan application can't even get off from there because we are not in a position to determine the ability to repay. And what we saw coming out of demonetization about a year ago, a lot of money has not been deposited into bank accounts. And that is surprising and it's alarming for several reasons. One is that, well, there's the crime risk. What if there's a fire in your home? The other thing is when we get financial statements, we match it back to some extent to your deposit statement. Recently, I got financial statements. Revenue on the financial statement was reflecting about $32 million. And when we try to match it back to the deposit in the bank, in the bank account, we were seeing a deposit activity of 1.4 million. So when we get financial statements, we need to validate it. We expect that the customer will be in a position to help us validate it because sometimes they don't really understand totally what is in there, but when we take the time to explain to them, that's where we get the information. And they're more practical, they're more hands-on. So when we get the information, we're able to represent them better. But in line with financial statements, sometimes each financial statement does not show the ability to repay. And that could be one of the primary reasons, is that the customer is unaware sometimes of what the financial statement holds. Security is another aspect why a loan application could be declined. Sometimes the security is not enough. It's not sufficient, or even sometimes we get a credit, we submit it, we get it approved. And when we reach the point of actually disbursing or booking the loan, we encounter issues with the security. For instance, if it's real estate, issues might come up with the title on the property. If you can do searches on the property early on, if the customer is willing to, you can read out whether or not the property is a viable one. It's something to consider carefully because the expense is for the customer. Another reason why a loan could be declined is because of the delinquency history. And paying your loan on time is something that is so important. I know right now delinquency is going up because of the situation with the pandemic and the loss of revenue earlier on during the months of, in particular, March, April, and May, and then we started opening back up. But it's very important. And a lot of people think that, well, I go pay the bank next month or next 2 months, but then remember it goes on your track record. And you want to have a good track record with the bank because when we are representing you and we're making a recommendation, we want to be able to say, well, the customer has a history of repaying on time or generally on time, all things considered with the pandemic right now. And just to add as well, sometimes we would get a credit application. The customer wants to develop, say, perhaps a property for sale. But the thing is, you may not have the experience in doing it. We may not have a fallback source of income. So in situations like that, where the application type, or it's a speculative type of project that you're going into, which tends to be a little more riskier for us to consider. So there are several reasons, and loans are not usually declined for one reason. Sometimes there are several, but sometimes if that one particular reason is strong enough, we may choose not to move forward. And this is why it's important, as I said before, that we have discussions early on with the customer. And having these type of discussions early on, where that we're able to advise the customer on what we need to look for. Sometimes customers come to us and they say, well, I already do the searches, I already completed the valuation. But when we look at it, the evaluator is not on our panel, the attorney is not on our panel, and it could lead to a waste of their cash, because we have a panel of valuators, panel of attorneys who we rely on for the quality of information that we would get from them. So, have the discussions early. Decline is something that we can certainly work on. It's not the end of the relationship. And banking is all about relationship building. And customers and bankers, we keep that in mind all the time. And it's not about just speaking to your banker or just speaking to your customer when there's a loan request before you. It's all about developing that relationship and developing that level of trust. So when the customer actually comes to you, or you see the need with the customer, you're confident enough to represent the customer.
Unfortunately, a lot of folks are not with their jobs, and they may be saying, okay, I have had this dream, I want to start my own business. So Holland, what advice would you give that person? Because one of the things that I didn't know, it was sort of a surprise to me, is the credit history, right? And how does one build that to make sure that when you do start your business, you're in good standing and a relationship with the banks? And this is, any banks, because I'm assuming you guys all use the same credit history formula for that. How do you start there? Where do you start as somebody heading into a new business?
There are two types of credit history. There's the personal credit history that the owner or the shareholder will have, which is normally an individual credit history. That's where you take out your credit cards, your personal loans, your mortgages. And as Ravi said, that is about paying those bills or those debts back when it's supposed to be paid back. So on a monthly basis, you make sure to make your minimum credit card payments. You make sure to pay your mortgages on time. If you're having any problems, come and discuss with the bank beforehand. So at least we know how to arrange your finances or how to help you. And that is where your credit history is very built on a personal level. So there's a place called TransUnion that really most of the banks use, and also other organizations that calculates your credit score, and that's what banks use to track your credit history. So we can pull up your credit score and see if you had problems paying a loan, let's say at another bank 2 years ago, 3 years ago. And again, as Ravi said, it's not a no if you, automatic no if you had bad credit history. You need to discuss with us why that loan went bad, or why you had problems paying at that point in time. And we can see where we could help you move forward and improve your credit history in the future. And some people do not understand the importance of a personal credit history as well. So they may say, I have the cash, let me pay cash. But credit history also helps you get lower rates on loans, lower rates on mortgages. And again, when you're looking to open a business as well, we also check the personal credit history on the shareholders or the directors as well. So that will count, because once we see that you as a director have a history of repaying your loan properly, we can make a deduction that as a director of the company, or as a person who is leading the company, you'll also show that same or show that same trend in paying your company loans as well. So again, it's about building a relationship, and that's where the relationship starts. And it's about building a rapport with your banker, discussing with the banker how we can help you achieve your goals and achieve your plans.
The conversation about cash flow, Ravi, because you mentioned it in the top three things when your application for loans, right? And the cash flow as it relates to operating cycle. Can you elaborate more on that? How does that affect your loan application?
When we are considering a loan application, one of the things we ask for sometimes is a cash flow statement. The cash flow statement, it basically tells you, or the it gives us an idea. It's a projection of how you would be expecting your inflows and outflows of cash to come in, and also it would identify the shortfalls or the pitfalls, because you look at a lot of the time, people buy goods, they buy out of China, you name it, Panama, wherever it's coming from. Remember, sometimes you need to pay beforehand. When you pay, you have to wait for it to be manufactured in some instances. You have to wait for it to be shipped. Shipping could take anywhere from a couple of days to a couple of weeks to a couple of months. Who knows? Especially now, shipments are being delayed. So there is a financing need there. What we do, we ask customers to provide this cash flow statement, the cash flow projection, and it will tell us what would be the shortfalls within the business. So maybe in a case like that, you need the bank to help you buffer that time within which your product actually reaches your store for you to sell. So we can consider something like a overdraft facility to help you during this time. Because while you're waiting on stock to come, business has to run, right? And we want to make sure that you have all the cash flows that you need as much as we can extend to help you during this time period. And some of the documents, so we will look at your age receivables and payables listing. Now, your age receivables and your age payables tells us whether or not you're encountering issues with collecting your money. So reason why we say it's aged is because we categorize it, like 0 to 30 days, 30 to 60, 60 to 90, and greater than 90. You'll tell us whether or not people are taking long to pay you. If they're taking long to pay you, does not necessarily mean that you have bad paying clients. It's just a matter of considering the economic state right now. People are taking longer. That's what we are seeing. Now, if you are taking longer to collect your monies that are owed for you to you, it may mean that you are taking longer to pay people locally or internationally who you may need to pay for your goods, and it would impact your reputation as well, because if you don't have that money, you don't want to be in a situation where you did not approach the bank for a credit facility or overdraft in this instance, and the bank has to return a check for some reason. And once a supplier sees a return check, then there's a certain level of skepticism in their mind as to whether or not future checks will be returned. And then they start asking for bank drafts, and it becomes an inconvenience because every time you have to now pay that supplier, you have to come to the bank and request a bank draft, and every bank draft you'll have to pay an additional fee, of course. So there is the opportunity there. If there's stock tied up in the ground, or if you have ordered stuff and it's being shipped and stuff, or you have directed monies towards the capital equipment and you need breathing room, please approach the bank, approach them early so that we can help you. The reason why I keep on saying that we need to approach your bankers early is because you may come to a meeting, you may tell the banker the shortfall, but then the banker will say, well, here's what, we need to get certain documentation in order to support the application. And time is running. You may not be able to put together information, or you may need to go to your accountant. And accountants are busy most of the time, especially now where they have a backlog. And they're not sitting there and waiting for you to come just to say, well, I need a cash flow statement, I need a cash flow projection, I need to submit it to the bank because I have checks to write and the need is urgent right now. So approach your bank early, take the time to talk to your banker. Banking is all about relationship building. Have that rapport. You don't need to visit a bank just because you need a loan. You need to know who your banker is and who is representing you and develop that relationship with them and invite them as much as you can. And it's a mandatory requirement within the business side, the commercial side, that you visit the customers as often as you can so you can get a greater understanding of what their business is all about.
But that was like my first experience with money. Very, very first experience.
I've been in banking since I was a teenager.
If you've just joined us, thank you to Ravi and Holland from First Citizens Bank. They're sharing some insights if you are in search of getting a loan for your business. When it comes to setting up your vendors and paying them and so forth, we have the adoption of online payments, and making sure that you're able to track everything. What advice would you give to somebody who's accustomed to having that petty cash voucher and having the cash and getting people sign it up and, those vouchers I know draw somewhere? What is the advice you give to that business owner?
The advice I would give, I think COVID-19 taught us a great lesson, although it's very unfortunate. It teaches us to adapt and it teaches us that we can't do the same thing the same way that we have been doing for years. So people who still hold on to cash, there are plenty other ways. Cash really is a cost right now because if you gather cash in your business, you have to leave your business, sometimes lock up your business to come to the bank to deposit that cash. You also have to wait on the line, and again, time is money. And what we have been doing for a while is trying to get people away from their dependency on cash onto electronic services. So there are credit cards, there are bank cards, there are debit point of sale machines, there's eFirst, there's Ecommerce. All those things are really to help the business owner to manage their time a little more properly and manage their funds. So let's say a business owner is selling $20,000 worth in goods per day. It is easier for them to take that $20,000 by credit card or by card. It hits their account by sometimes actually same day or next day, instead of having cash and probably have to wait until midweek or the end of the week to actually deposit that cash to their account. So it's an immediate credit, and they can start writing checks or not even writing checks. Now, checks is something that is actually going out as well, doing transfers or doing ACH transfers directly to their suppliers or doing wire transfers directly to their foreign suppliers. So cash and other manual systems, businesses need to reevaluate to see if it really makes sense for them anymore. And yes, the bankers still operate on the both systems, both cash and the electronic systems. But we can see that in the future, a lot more customers and a lot more suppliers will demand electronic services only. And we will see the persons who still holding on to cash kind of being left behind, because a lot of customers don't work with cash anymore. They just work with their card. And that's the way of the future.
One of the key things that we look at is the financial statement of the company. It is a snapshot of the business, how the business is performing. And I think we need to understand that bankers, we are mandated and we come out to businesses to see their business and to understand what the business is all about. But we are not there every day. We won't be there every day. And you being the business owner, you know exactly how your business is running. We get an insight into your business as to how the business is performing by way of the financial statement. The financial statement is our way into looking to see how we do comparisons between year 2018, 2019. We may ask for interim management accounts because of the COVID situation that would have impacted the economy in 2020. So financial statement is one of the key items that you need to submit to the bank for loan consideration, because we use it mainly to determine the ability to repay. And we want to be able to see or to present to our credit committee based on the financial statements that this customer is shows the ability to repay, and that is one of the key areas that we need to establish before we can recommend it to our credit committee. Financial statements, interim management accounts is one. Also, cash flow statements are very important right now, because you would have seen situations now where businesses are on the brink of closing. Some of them are. We hope that Christmas is able to pull them through. Cash flow statement, we need to get an idea of what you are looking at or what we can expect from the business within the next financial period, within the next 12 months or so. This gives us an insight as to what cash inflows and outflows we can expect, or what hurdles that you expect that we would help you to treat with. Also, we spoke about receivables and payables listing. Receivables listing tells us whether or not you're encountering any issues in collecting your money, and the payables tell us whether you're, and I'll translate to the payables listing, whether or not you're encountering issues with paying your suppliers. One critical area as well, what we look at right now is your outstanding contracts. If you're a contractor, we would want to know what are your contracts that you are working on right now, your outstanding contracts, and this will tell us who you are dealing with, which companies you are dealing with right now, how much is the value of the contract, when it is started, when it's expected to finish, as well as prospective contracts that you are bidding on right now, and gives us an indication of the revenue that we can expect. Not only that, when we have an idea of the duration of the contracts that you are dealing with, it will help us to understand and help us to determine the term of the loan that we should give. Because if you're a contractor, most times you would want to tie the term of the loan or the duration of the loan to the term of the contract, because that's where the repayment source is coming from. Also very important is the annual return. And if you're coming to the bank, and it's a mandatory requirement from the government, is that you must file the annual return. And if you don't, there's a penalty for that. And the reason why we say the annual return is important, because it gives us an idea of who the directors in the companies are at the moment, who is the registered secretary, who is the principals. And we want to make sure that when we consider a credit application, that we are actually speaking to the decision maker. So the annual return will tell us who are the principals in the company. I know we don't have a lot of time, but if we consider property purchase, which is one of the more common loan requests, we would need up-to-date valuation. We need sale agreement, WASA clearance certificate, WASA bill, and a building tax receipt. And if you're building, sometimes people start construction projects, then they come to the bank because they don't have the funding to finish. But by the time they reach the bank, it's because you're building without town and country approval. I need to understand that the bank needs to be in a position, if you're going to hold something as collateral, if we have to liquidate it, we must be in a position to immediately liquidate it if we have to. So that's why we need to have all the ducks lined up, your town and country approvals, your WASA clearance certificates, and this kind of thing. Considering if you have a rental property, one of the things you would need is a rent roll. The rent roll, and there isn't a standard format. It will tell us the number of clients you have, the income that you generate from these clients, the duration and the term of the rental agreement. And it's very important because we see a lot of tenants with month-to-month arrangement, which is a little bit more risky as opposed to a lease agreement that spans over 3 to 5 years or so. So, these are just some of the items that we would need, to consider the loan application when you're approaching the bank.
basically it's a financial story, because the marketing me kind of has to look at it in the most plain terms possible, and you have to showcase what your financial history and projection looks like, because it is a risk that is being taken. So basically a complete understanding of what that looks like from your business point of view. You need to know what that looks like. So would it be right to say that it's somewhat of a financial story?
It is, and that's why we ask for your historical financial statement, because this shows us the trends in your business, and it shows whether or not revenues are increasing or decreasing, or not to get too in that, but we look at the financial ratios as well that tell a whole lot of story. And the financial ratios would tell us what covenants that we need to put in place so that we can monitor to see whether or not the situation is worsening or whether it's improving. There's also the issue of reporting requirements. A lot of times when you disburse a loan and you go through the letter of offer and you explain it to the customer, it's important for the customer to actually keep it on hand and know what the reporting requirements are. Because when we advance a loan, we look at your financial situation and we advance a loan, we review that loan as well on an annual basis. And we don't want that at the point of the annual review, we are now trying to put together the information. So look at your letter of offer, understand what the letter of offer says, and try your best to work with your accountant to have the information ready so that we can complete the annual review on time. And an annual review should not be considered a bother where you just, well, you need a financial statement to be given you the information so you can do the review. It helps us as well to determine whether or not there's opportunity for growth and whether or not we can assess you for more funding that you may need. If crime hasn't hit you as yet, you may take it for granted, but businesses work hard and the entrepreneurs work hard to generate that level of cash flow on a daily basis. Think about working for the week, keeping the cash at home or keeping the cash at the business, and then you become a victim of crime and you lose it in one go. At that point, then you might think, I should have probably paid $35 and use a night bag and deposit it in the night safe. So it's something to think about. We are pushing customers to go online, and it's better for the COVID situation where you can accept money directly into your account. You can pay people directly from your account, do transfers, pay your bills. So you don't need to come to the bank to line up to do that. We have the night bag option. We have the option of people paying directly into your account, and there's also the drop box where you can come in and make a deposit. So it's a lot of things to think about, but think about cash flow being the lifeline of your business. And if there, for some reason or the other, you lose that money or you get in the habit, and sometimes it's just a habit of keeping cash, keeping cash at business, keeping cash at home. And demonetization last year brought that to light. When sometimes opportunities come up that you may not have seen, predicted, and when you come to the bank and the bank says, well, okay, you don't have financial statements, well, maybe we can help you put together management accounts. But when you look at the deposit activity on the account, there's nothing for us to support the financial statements with, and that's where we end up in a little bit of a problem.
For a limited liability company, there are separate legal concerns. There could be separate shareholders, separate directors. The person who's using the card may not be the owners of the company. There are lots of legal considerations. That's why you cannot get a ATM card for a limited liability company. But there are a lot of other options, as Ravi would have pointed out, electronic options that will solve your problems by not even having to join a line or come to the bank or even have to meet up with the customer, right? People can send ACH transfers that can get to your account in under 24 hours. And with tracking online, you could also see when it hits and you could deliver the goods to your customers. So the electronic options are so advanced now that we really don't need to see us, although we like to see you. We don't need to see us if we don't want to.